Hey there, future millionaires. Welcome to the Profit Profit. Today, let's talk about handling big market moves, like the one we've recently had. We've seen a 15 to 20% sell-off in the market this past week or two. Systems and beliefs really get tested in these times. Even those of us who've been in this space for years get affected. And while these big moves aren't surprising, as they happen frequently in the crypto markets, they are always fairly startling. So how do you handle these moves? Let's think about it from a couple different angles. The first big picture question to ask is, what has actually changed to affect the price in this fashion? Or why did the market just do what it did? This can be very hard to answer, but we'll give it a shot. We can look at a couple of different causes here recently. 1. The Fed announced the tapering of market support. Even though they haven't done that yet, they say they will in 2022. But again, nothing has actually happened or is set in stone. Investors are simply trying to front-run the market here. 2. There was and is a large bullish sentiment as influencers everywhere were calling for $100,000 on up per Bitcoin by the end of 2021, telling you to buy every dip. And what that can lead to is overconfidence, which leads to over-leveraging. When the market gets over-leveraged in either direction, it tends to snap back to the middle, inflicting max pain on the highly leveraged. This has happened multiple times since the all-time high. Let's also define overconfidence. That's simply thinking you know what the market is going to do before it happens. Hubris has and always will be punished. 3. Simple momentum. Losses can cascade into bigger losses as the paper-handed people without a plan bail out, which leads to more paper-handed people bailing out. And that's no different than when the market surges up. People jump in without a plan, oftentimes signaling market tops. Momentum is psychology. Most people expect what's happening now will continue happening, but nothing lasts forever. So in this case, when I see possible reasons outlined, I don't see any major factor which affects Bitcoin long term. These are all transitory, short lifespan events. Bitcoin hash rate is near an all-time high, which signals overall network strength. Institutional money continues to flow into the space, with plans of even more investment in 2022. And that really is the only money flowing into the space recently. Retail has really dried up as of Q4 2021. Bitcoin market supply is at a low. Although this is offset by Bitcoin futures and derivatives, which fractionalize Bitcoin and create more supply than actually exists. This is what is referred to as paper Bitcoin. If you leave your coins on exchanges, this is what they can do with them. They will often use your own supply against you, in a manner of speaking. They use exchange-held tokens to create paper tokens, which can then be used to short the market. This is not irregular. It's no different than what your regular bank does with your savings. It doesn't just sit in the bank. They use the money in your savings account to make more money for them. Same thing here. So if you are down in your investments right now, knowing that these factors that appear to be causing this downturn should be short-lived, you definitely consider holding if possible. Reminder, being down doesn't mean you've lost. That doesn't happen until you actually sell. With the current factors, holding and even adding in small percentages would not be considered unreasonable. If you're down and don't need the money right away, it's usually best to stay patient in times like these. These times test your plans. Did you follow your plan or your indicators? Or did you decide in the heat of battle that you know what's best to do? And all those hours you spent on your charts formulating your plan were thrown out the window in a momentary panic. It sounds ridiculous when you read it, doesn't it? But anyone who has ever tried to trade will recognize this as a truth. Having a plan is not the same as executing the plan. That's why at Profit Profit, we stress that having a plan you're able to execute in the heat of the moment is the only thing that really matters. The best laid plans are worth nothing if you keep them on the table gathering dust. It's also why we stress starting small and paper trading to see how you'd handle these situations in real time, both financially and emotionally. There's no substitute for experience. For the record, Profit Profit's main indicator went red in the mid-50s, signaling exit. But at that time, everyone was predicting 100,000K Bitcoin and higher.
Because they're sheep, and sheep get slaughtered.
Start small, learn to trust your indicators. If they don't work, fine-tune or scrap those indicators until you find something you can work with. Once you do this, you can turn down the volume on all the outside noise and focus on what's important, your plan. Do you have a plan you can realistically execute? If this last downturn has shown you that you don't, please like and follow us. We'll do our best to make a plan that works for you. Everyone has different risk tolerances and time frames of when their money may be needed. So it's quite personal as to when to take profit and cut losses. Well, that's a wrap for today. Stay strong and safe out there. This is the Profit Prophet, signing off.